I'm here with Brian Marks. He's the vice president of Gershman Mortgage. He's been in the business since 2009, wrote over 200 mortgages last year. And the reason I wanted to bring him on is because he's one of the most knowledgeable people that I know when we're talking about mortgages. And there's been a lot that's going on with coronavirus in terms of before and after. I'm seeing a lot of it on my end. So what I wanted to do is I want to sit down with him and bring some insight to you. First off, who is this video for? If you've been thinking about buying it all in 2020, whether that's first place, a new place, second place, upgrade, downgrade, downsizing, we're going to talk about that. If you've been thinking about selling it all in 2020 and now you're, like what's really going on? Is that even possible now? We're going to get into that a little bit. And then also, if you're just kind of interested in what's going on in the real estate market, this is also going to be really interesting for you. Without me talking too much, Brian, how are we doing today?
Doing well. Thanks so much for having me, Connor. Really appreciate it. Hopefully we can shed some light on everything that's going on in the real estate and mortgage markets.
How's the quarantine going with you?
It's okay. Getting a little stir crazy here and there, but we're making it. You got to do it for the greater good, I guess you can say.
For the greater good, definitely. All right, so Brian, the first thing that I want to talk about is just like on a high level, if you can kind of paint like a general picture, people, just kind of describe like what were things like before the coronavirus, and then now what are things like after the coronavirus, and talking about the mortgage world.
So I think at the end of the day, things haven't changed. I mean, we had some changes, right? Mm-hmm. But nothing that's really changed the market that significantly, just a intricacies, I guess you can say. And it's really more to do with the lender side, how the process works, the real estate process in general, versus the actual, what does it take to qualify? Although there have been some changes I'll kind of get into as we go forward. To give you an idea, standardly, there's a lot of different loan programs out there. For first-time home buyers, one that's particularly tailored towards them would be FHA loans. Previously, before this whole coronavirus, all day, and as long as somebody's credit score is over a 580, we may have options for them, particularly FHA VA loans. One of the big changes we've noticed now, which literally just rolled out about last week, is the mortgage servicers themselves. It's very tough to place a loan with an under 660 credit score now. Let's say previously, somebody came to me under 660, totally fine, we can get them approved, no problem. Nowadays, a little bit harder to do that. So that's just one thing we've noticed. A lot of the process has changed as well, nothing over-ending. I think for a lot of people, we've noticed one, demand's still there. So people are still buying and selling their houses. The people who were committed to buying a house before this happened are still committed. The people who are kind of like on the sidelines a little bit, just testing the waters, we've noticed they're not really as involved in the process in terms of buying right now. Maybe they've taken a couple steps back, but I think the housing market's still very good at this point.
Right. So basically, one big thing right now in terms of difference is just the credit score. So if anyone has any issues with their credit score, maybe now is a good time to, especially when you're home and you've got a little bit extra time to kind of dig into that and to make sure you're at least at the 660 level. And then if you're at the 660 or above, you can definitely get approved at that point, as long as everything else lines up.
Another big change that's happened would be, I call them funky loans, for an example. Legally, they're designated under non-QM loans, but don't let that terminology kind of confuse you. Figure anything that is not Fannie Mae, Freddie Mac, FHA, VA, USDA, all your main loan types. The government regulates. Those loans are pretty much been pushed out of the industry.
Let's just talk about, so from a buying perspective, right? So how have things changed for them and what should they be focused on right now?
Aside from the credit score, which I know we just covered, aside from that, it's really just the employment. Previously, the requirement for lenders was as long as you're under contract in the process, you're ready to close, the lenders would typically verify that you're still employed at your job within 10 days of the closing date. Now that's basically updated and it's within 48 hours. One, making sure obviously, you have to have a job if you're going to be closing. Going through a little bit of dicey times right now. Some people are unfortunately losing their jobs. So that's one thing that lenders are really going to look into. And to make sure your full 40 hours per week, let's say if you're hourly, one, you're not working limited hours now. You haven't gotten moved to part-time. Two, if your salary, your salary hasn't been reduced, no compensation changes if they have, and you're already pre-approved, make sure you circle back with your loan officer.
So for someone who has been affected by the coronavirus in terms on the employment end, let's say, for example, their hours are being cut back back a little bit
Mhm.
or something like that. What's your advice for them?
So if you have noticed a change in your employment, like at all, one, if you've been pre-approved and you're out looking for a home, let your lender know immediately. You're pre-approved currently. If there's a change in your employment, you may no longer be. Hopefully that's not the case. Currently under contract on a property and you notice any change, let them know, because at the end of the day, the lender is going to find it. The sooner they know about it, the better, because you have more time to overcome that. Maybe restructure some things so that your transaction can still close.
Right. And I think one big thing too with buyers right now is that even if you are pre-approved, even if you even are under contract, is to circle back to the lender and make sure, you're still good to go. Banks are, right? They are getting a little bit more tight about things. As a general piece of advice, it's probably good for everyone to even just trace back with the lender and make sure they're still 100% pre-approved, 100% good to go, and nothing's kind of changed.
Exactly. I definitely recommend that.
That's all really important on the buying end. Now, let's talk about if someone was on the selling end. They've been thinking about selling their home and now they're just like, oh my gosh, how is anything even selling right now? Like, what does that look like? Do buyers come in hazmat suits? Obviously, you don't have to answer that question. Or if their property's been on the market and now they're wondering, is it kind of a waste of time right now? Is nothing actually moving? What do you think they should be aware of in terms of changes on the mortgage end? And to specify, we're talking about the mortgage end. So we're kind of talking about for buyers coming in, what should they be looking for in their offers?
So I'd recommend sellers, like, let's say if they're paying cash, definitely get a proof of funds. A lot of people, if they're buying cash properties, they may have those investments that are tied up. So their investments could have substantially changed over the past month here. For sellers as well, let's say those funky types of loans, doctor loans, bank statement loans, anything like that that's outside of your standard conventional FHA and your standard loan types, definitely call the lender right away, inquire as to if they're still funding those. Look at the date of your pre-approval letter to make sure that it's still valid on there. That's a big thing. Look at how much they're putting down. That's something that you may want to scrutinize a little bit as well, just to make sure that the transaction's set up for success from the start. Discover any underlying issues at the very beginning versus potentially pushing those down the road to, let's say, 2 weeks before closing, and now all of a sudden something pops up out of the blue. We're noticing a lot of adaptation in terms of closing. So one thing that may affect you, I know home inspectors are now following different sets of requirements in terms of safety protocols. Appraisers is another thing that has changed. So previously, no matter what, interior and exterior appraisers were required in order to close on a property. If you do really feel uncomfortable with having an appraiser in the property, when that appraiser calls you to schedule time to get access, you can let them know, unfortunately, I'm not interested in having you come into my property for safety reasons. A lot of title companies here, they're starting to do what we call drive-through closings. You'll go out to the parking lot, drive up here with your car, they'll bring somebody out, you can close in your car, and then they go back and they finish up on their side.
So completely up-to-date pre-approvals, proof of funds, and making sure that's up-to-date. And then the last part, which now I'm blanking on, what was the last thing again?
The appraisals, exterior appraisals.
Right. So you do have that option now where you don't have to actually let them in your place if you don't want to. And you can.
Exactly. And then they'll do a drive-by appraisal.
Right. Yeah, I just had a closing actually, and everyone was like 6 feet away and there was only 3 people. That's kind of how we did it. Everyone had different pens. So they had like a box of pens that just opened. So everyone signed with their own pen. Everyone was 6 feet away besides the husband and wife, who, since they're living in the same place, it's okay. But that definitely would be interesting to do a drive-through closing. I could almost imagine maybe, more mail-ins will become popular too, like a local mail-in,
mailway closings, exactly.
So a couple of things, which I've heard people ask me, should they only be accepting cash offers right now?
I would say no. Really, as long as the loan is set up properly, everything's been vetted. At the end of the day, the seller is still making the same amount for that particular offer, whether it's financing or cash. If sellers only reduce themselves to cash offers, I think they can potentially leave a lot of money on the table.
Right. And normally, as you're saying, the cash offer is going to come in at a lower price. That luxury of having an easier close often comes at a cost, which is going to be less for you. So, at the end of the day, as long as the buyer is 100% pre-approved and they've been verified to be pre-approved, like you were saying, and not just like a month ago, then you still see the conventional loan as being a safe option.
Exactly.
One other thing that I've been hearing too is they've been asking me, with the changes now and everything, would you recommend people not accepting offers with an FHA or VA loan? Do you see those as being more risky?
No, I really don't. I think there are still very, very safe programs at the end of the day. Typically, the reason that a lot of people prefer conventional is,
Mhm.
let's say if your home is a little bit of a fixer-upper, for example, conventional will be a little bit more lenient on some of those repair items than FHA or VA would.
Right.
VA and FHA pretty much assume the property's got to be in move-in ready condition. So it doesn't matter if the bathroom's from the 1940s and has pink tile throughout it, as long as it's safe and livable, that's what they're going to look for.
What do you got against pink tile?
Yeah, exactly. But no, in terms of property's condition, as long as your property's in passable condition, you'll know through the inspection period. And most sellers have an idea on what condition their property is in. And FHA and VA loans are still totally viable. So I wouldn't exclude those when it comes to accepting your offer if I was talking to a seller here.
And so really, if you had, let's say, an FHA or VA loan, if you're on the selling end, you might try to get them to pay more than, let's say, if you had another buyer interested who was a cash buyer or a conventional buyer, but you're thinking that since that risk isn't that much, if you can get them to bring a higher price, you'd probably be going with that FHA or VA. Because at the end of the day, they're going to walk away with more money.
Exactly.
I mean, I think that covers a lot in terms of, what's been going on before the coronavirus and after the coronavirus as far as the mortgage market. And so to kind of recap, again, what are the main things on the buying end that you should be focused on?
So main takeaways, one, credit score. So figure 660 plus is what lenders are going to look for now. Verification of employment all the way up until closing. And then for sellers, really, appraisals, you can tell the appraiser that you don't feel comfortable with them coming into the home. You can do remote closings if you don't feel like physically walking into the title company themselves. But really a lot of it is, just run everything past your lender. They'll let you know if there's an issue. A lot of people do have questions. A lot of things are changing fast. And, there could be a different set of rules 2 weeks from now. So constantly stay in touch with your lender, make sure everything's okay, and you won't have any issues throughout the process.
And then, if you are on the buying end, let's say, for example, the credit does happen to be an issue, start that conversation. Get some of those numbers and stuff, start working with real tangible things. Then you can kind of get on a plan, whether, it's you need to get your credit score up this, or, we need to get this much more of job history. Then you can kind of know that and actually be on the plan to get it versus just kind of hoping and praying that at some point you'll be qualified.
Gunslinging.
Yeah. And there is annualcreditreport.com where you can get your free credit report once a year. That's the government website. And I believe that's what's called annual credit report, something like that.
So that's a good one. And then I use Credit Karma myself, just to really maintain it, monitor, make sure there's been no fraudulent activity on it. Once your lender actually gets a real credit report, the numbers could be a little bit different than what you see on the consumer side there.
Well, Brian, I appreciate you coming on in your humble abode of quarantine over in Tampa. And I know that this is definitely helpful for people, whether they've been thinking about buying, they're actually buying a home now, or they've been thinking about selling, they're actually selling a home now. Because obviously with everything that's going on, everything's changing completely. A lot of people have questions. And so I think that this was definitely very helpful for them. If anyone's got any questions, feel free to just comment them below, and then myself or Brian can answer them. And I'll also include your contact information in case anyone wants to reach out directly to you with any more sensitive questions that they wouldn't want to post about. Anyway, Brian, get the hand sanitizer out there. I'm sure you're
all right. You do the same.
Use that Bolo and take a little bit of time to relax, hopefully, or something. I know you're
Thanks for having me on. I appreciate it. And any questions that anybody has, feel free to reach out to me at any point. I'm happy to help.
All right, Brian. Stay safe. I'll talk to you soon.
You as well. Thanks, Connor.